5 U.S. Airlines landing a very big deal for aid with Uncle Sam today. Let's get to Phil LeBeau with all those details. Good afternoon, Phil.
Hey, Dom, this is the second half of the $50 billion that was set aside for the airlines. Remember, $25 billion was to preserve the payrolls at least through September 30th. The other $25 was available if airlines wanted to borrow from the Treasury Department. And 5 have said, yes, we do want to borrow, and they have come to terms with the Treasury Department. We don't know the exact terms. We'll find that out this weekend. American, Hawaiian, Spirit, Frontier, and SkyWest. By the way, there are other airlines that have said, look, we may need to borrow from the federal government. So you could see some more federal loans in some fashion, though the end of the deadline, as this has all worked its way out, people are saying, we think most of the airlines have enough money to make it through into the fall and into the beginning of next year. A couple of things we want to look at. First of all, American Airlines borrowing $4.75 billion from the Treasury Department. Americans' liquidity right now, around $15 billion. And then you've got the airline index, and we're looking at this year to date. And the reason we're showing this to you, guess how much capital has been raised just this year? Most of it through debt. $46 billion approximately for the industry. Finally, as you take a look at shares of Delta, Southwest, and United, keep in mind that we are hearing from airline executives they are starting to see demand flatten out as COVID-19 spreads in the South and the Southwest. And as a result, you are seeing people who may have booked trips, Dom, who have said, you know what, I'm going to pull back on that. I'm going to waive going on that. I'll hold that ticket. Maybe I'll go 3 months, 6 months down the road.
One of the most directly impacted industries out there, Phil LeBeau. Thank you very much for that update on what's happening with the airlines and Treasury. Our next guest says today's $25 billion deal that Phil LeBeau just briefed us on does not mean the airlines are cleared for takeoff, and the runway to recovery could be longer than many investors realize. Let's speak now with J.P. Morgan's senior airline analyst, Jamie Baker. He joins us now. Jamie, it seems so very clear right now that it's going to be a tough road ahead for these airlines, but how tough will it be?
Well, look, this is one of the reasons that about 3 weeks ago we suggested that our clients take some profits, take some money off the table. We were concerned that demand trends were not particularly robust. We were concerned that the TSA throughput would begin to moderate. We felt that the stocks had just pulled a little bit too far ahead of themselves. We've been pleased with how the last 3 weeks have played out, but what has changed during that period, and Phil touched on this before, is the airlines continue to prove that capital markets are open. In just the last 2.5 weeks, there's been $15 billion raised, about half of that just at United. And what that does is extend the runway. It hopefully bridges the gap between where we are today in terms of demand trends and where we hope to be 1 year and 2 years from now. But on the demand front, we are not seeing any data that J.P. Morgan considers to be all that, robust. We're pretty unimpressed.
All right. So Jamie, hold on a second. I want to bring Brian Kelly into the conversation here as well. BK, what are you thinking right now?
So, Jamie, my question is, what kind of permanent demand damage has there been done, in particular to the international? And then, which of the airlines are exposed to that? Because if I look at my schedule, I was scheduled to be in Asia this spring. I canceled that. I don't see myself probably going back to Asia for quite a bit of time. So is that a permanent change? And how does that impact your view on some of the bigger airlines?
It does impact how we model. We think that domestic trends will lead the recovery. We can envision very plausibly that the domestic environment gets back to 2019's level sometime in 2022. I think you hit the nail on the head. I think international, there are lots of regulatory impediments. You and I were both supposed to be on the road this week. It sounds. We think that international can take till 2024 to recover back to 2019 levels. So in aggregate, our view is that the U.S. industry, from a profit output perspective, won't be able to rival 2019's level until sometime around 2023. But we do expect the all-domestic names like Southwest, names like Alaska, to lead the way, to get there first.
Jamie, it's Karen. Let me ask you something. If we sort of look out to maybe 2022, where the airlines are some sense of normalcy or approaching 2019, it looks to me like the enterprise values are they're very expensive relative to where they were. given all the debt and all the cash that they're going to burn through, what do you think of valuations for looking out to a more normal economy for the airlines?
We are definitely taking into account the degree to which balance sheets are being strained by this crisis. It's one reason that currently I have fewer buy ratings in my universe than at any prior point in my career. The industry had successfully restructured itself in aggregate to withstand another 2009. That's why these entities were buying back stock aggressively, paying dividends, because they could withstand another great recession and probably continue to generate cash and net profits. My concern going forward is that COVID will now be applied as the new stress test, which will require these airlines to run with just ridiculously high volumes of unproductive cash. And that's going to have a real impact on how we pick stocks. I mean, no doubt about it. And then, of course, there's the whole issue of technological substitutes to air travel. I mean, there are a lot of things to be grappling with here.
The models only get more complicated given COVID-19. Jamie Baker, JP Morgan, thank you very much, and have a great holiday weekend, sir. All right, guys, let's trade this. Tim Seymour, I'll go to you here. Is there a stock in particular within airlines that stands out to you as the winner, given all of this negativity?
Well, I mean, Jamie is so good at what he does, and he's seen so many cycles, and I think that's one thing we all need to remember. Look, I've largely been bullish on airlines going into this, so I'm certainly doing some mark-to-market on a few. But Delta is the best balance sheet, and when you think about the money, Jamie talked about the capital markets. $37 billion was raised in debt and equity, and then extensions on grants. You bring it up to another, like basically a total of $60 billion, not counting what the Treasury is bringing. Insolvency risk has been taken off the table for 2020, but here we are all talking about what really will be profitability or normalized earnings, and I don't think you should be pricing these companies at normalized earnings growth right here and now with that uncertainty. But riding through with Delta, I think Southwest is the other balance sheet that you can feel most confident in, but these are trading stocks right now.